Take out the last receipt you got. Any of them. The desk fan, the shoes, the phone charger. There's the price. There's sales tax. Two numbers, printed right there in front of you. Now look for the tariff. It isn't there. It's never there. But if that thing crossed a border to reach you, a tariff was almost certainly paid on it, weeks before you walked into that store, at a port you have never seen, by a company you have never heard of. Tonight we're going to follow that money, from the dock to the shelf to your cart. I'm not going to tell you whether tariffs are a good idea or a bad one. That is not this channel's job, and honestly, it's not the interesting part. What I want to show you is the route the money takes. Because once you've seen the route, the question changes. It stops being, why does everything feel more expensive, and becomes a path you can actually point at. Let's start with the strange part. Sales tax and a tariff are both taxes attached to something you buy, but your brain treats them as completely different animals. Sales tax gets added at the end. You see the subtotal, and then you watch the number get bigger. It is annoying, and it is meant to be. It is designed for you to notice. A tariff is the exact opposite. It gets paid at the very start of the journey, months before the price tag is printed. By the time you see that sticker, it is already inside the number. Same kind of cost, completely different feeling. And that difference isn't some quirk of psychology. It's a difference in where the tax sits in the chain. So let's go to the border. A container ship docks at a port. Before anything in that container can move 1 inch inland, someone has to file an entry with US Customs and Border Protection. That someone has a name. They're called the importer of record. The importer of record declares 3 things: what's in the box, what it's worth, and which category it falls under. Customs takes those 3 inputs, applies a rate, and produces a number, and then the importer of record pays that number. Here's the part that catches almost everybody out, and I want to be fair about why. The word itself is misleading. A tariff on China sounds like China is mailing a check to Washington. It isn't. In the overwhelming majority of cases, the importer of record is an American business, a retailer, a manufacturer, a distributor, American company, American bank account, money out the door that week. The check is written in America. That's the first thing to hold on to. And we can check where that money lands because the government publishes it. In fiscal year 2025, customs duties collected came to about $195 billion. Through June of fiscal 2026, another $163 billion. That money goes to the US Treasury. It's collected from American importers. Whatever else a tariff is, it is a tax that gets paid in America. Now the interesting question. That importer just paid a very large bill. What happens next? They have 4 options, and in practice, most of them use all 4 at once. 1. Go back to the foreign supplier and push for a lower price. 2. Eat it and live with a thinner margin. 3. Pass part of it down the line to the wholesaler or the retailer. 4. Put it in the price. So the cost doesn't sit still, it gets cut into pieces, and every piece lands on somebody different. That's what makes this so hard to see. There is no single moment where the money moves from the government to you. There are dozens of small ones. The good news is that people have measured exactly how those pieces fall. In February of 2026, researchers at the Federal Reserve Bank of New York published their estimate. Through August of 2025, American importers were absorbing about 94% of the tariff cost. Foreign exporters, about 6%. By September and October, it was 92 and 8. By November, 86 and 14. Their own summary line, nearly 90% of the economic burden fell on US firms and consumers. I want to be careful here, because this number is very easy to misread, and it gets misread constantly. That 90% is not consumers paid 90%. It's the American side versus the foreign side. The idea that the exporting country quietly swallows the tariff, that mostly did not happen. So then split the American side in half again. Companies or people? A team at Harvard Business School has been tracking daily prices from major American retailers, matching individual products to their tariff rates and their countries of origin. Their finding, published through Harvard in April of 2026, over the first 7 months, American consumers absorbed up to 43% of the tariff burden. The rest was carried by American companies. Sit with that one for a second, because it cuts against the obvious story. Most of it did not reach you as a price increase, at least not in those first 7 months. Companies took a large share of it out of their own margins. That isn't generosity. It's a bet that the policy might be temporary, and a bet that raising prices costs you customers you don't get back. And absorbed by the company doesn't mean the cost evaporated. It came out of a budget somewhere. Hiring, hours, a product that didn't get made, a price that went up on something else instead. Which brings us to the real question of this video. Why doesn't any of this feel like a tax? There are 3 reasons, and not one of them is that you weren't paying attention. The first is that it gets divided. One container might hold 3,000 units. A tariff bill of a few $1,000s, spread across 3,000 items, is $1 or $2 on each one, and $1 or $2 never triggers anything. Every single item passes the "that's fine" test. It's only at the end of the month, staring at a total, that you get the feeling that something moved and you can't say what. The second reason is that there is no line to read. Sales tax is itemized because the law says it has to be. A tariff isn't. There is no price tag anywhere in this country that tells you how much of that number is duty. That information does not exist at the point of sale, so not seeing it isn't a failure of attention. You cannot reverse engineer it from a sticker. Nobody can. I can't either, and I spent a week reading about this. The third reason is that it arrives late. That one deserves its own minute, because it's why the timing feels so wrong. When a tariff is announced, prices do not jump the next morning. The store is still selling inventory it bought before that tariff existed. Supply contracts run for months. Buyers wait to see whether the policy will even stick around. And the Harvard team found something very specific about how the increase finally shows up. Retailers didn't mainly make bigger price changes. They made more frequent ones, small increases more often, which is close to the least noticeable way a price can possibly rise. So the policy lands in the news in the spring, and the cost lands in your cart in the autumn. And the two never feel connected, because to you, they were 2 separate experiences, months apart. Here's the part I genuinely didn't expect when I started reading for this one. That same Harvard study measured how much prices rose compared to where they had been heading before any of this started. Between March and October of 2025, imported goods came in about 6.2% above trend. Domestic goods came in 3.6% above trend. Not zero, nowhere near zero. Things made in America moved more than half as much as the imported ones did. There are real mechanisms behind that. American manufacturers buy imported parts, materials, and machinery, so their costs went up too. And when the imported competitor gets more expensive, the domestic seller suddenly has room to raise their own price without losing the sale. So the effect isn't sitting quietly in the imported aisle. It leaks across the whole store. Their overall estimate of how much of the tariff actually showed up in retail prices, what economists call the pass-through rate, was about 20%, which added up to roughly 0.7 of a percentage point on the overall consumer price index by September of 2025. Now, a small number of companies have done something unusual with all this. They put it on the receipt. Back in 2025, CBS News reported on a few of them. A personal care brand called Dame added a flat $5 tariff surcharge at checkout. Honeywell's building automation division added a 6.4% tariff surcharge to its building management systems. What I find fascinating about that isn't the money. $5 is $5, whether it's buried in the price or printed on its own line. It's the reaction. People noticed. Some were furious. Some were grateful for the honesty. Nobody was neutral. The amount didn't change at all. Only the visibility did. And that's the whole lesson of this video in one sentence. How a cost feels has almost nothing to do with how big it is, and almost everything to do with whether it has a name. We are very good at arguing with a number that comes with a label. We are close to helpless against one that doesn't. None of this argument is new, by the way. We've been having it for almost 100 years, in nearly the same words. In June of 1930, President Hoover signed the Smoot-Hawley Tariff Act. Before he signed it, more than 1,000 economists, 1,028 members of the American Economic Association, put their names to a public statement asking him not to. You have probably heard the version where that law caused the Great Depression. I want to be straight with you because it's a great story and it is overstated. Most modern economists don't hold that view. Friedman and Schwartz's Monetary History of the United States gives Smoot-Hawley a footnote. The damage to trade was real. A common estimate puts something like a fifth to a quarter of the collapse in world trade between 1929 and 1934 down to it. But a tariff bill did not, on its own, produce the 1930s. I'd rather hand you the accurate version than the dramatic one. That's the deal on this channel. Here's why 1930 came up at all this month. On July 20th, 2026, the White House invoked Section 338 of the Tariff Act of 1930, that same law, to place a 50% duty on 554 tariff lines of Canadian goods, vehicles, dairy, alcohol. It takes effect on August 19th. As far as trade researchers can tell, Section 338 had never actually been used to impose tariffs before. It sat in the law, unused, for 96 years. 4 days after that, on July 24th, a separate action took effect. Additional rates of 10 or 12.5% covering 60 economies. Together, those economies account for about 99.4% of everything America imports. So how big is all of this on your side of it? The Tax Foundation estimates the average effective tariff rate on American imports reached 7.7% in 2025, up from 2.4% the year before. That is the highest since 1947. Their estimate of the cost per household for the 2025 measures was somewhere around $1,000 a year. Let me be honest about what that number is and isn't. It's an estimate published in May of 2026, and it does not include anything that happened in July. And household costs vary enormously depending on what you actually buy. Treat it as an order of magnitude, not as a bill with your name on it. And I'm not going to tell you where prices go from here. I don't know, and anybody sending you a confident number about next year doesn't know either. What I can give you is the root. A tariff is charged at the border to an American importer who writes a check to the U.S. Treasury. From there, it gets divided. Some push back onto the supplier, some absorbed by the company, some passed down the line, some placed quietly into the price you eventually see. The measurements say the American side carries most of it and that a real slice of it, though not all, ends up with you. It arrives late. It arrives divided. And it arrives without a name. So here's the sentence I'd like you to keep. A tariff is paid at the border. It gets settled in your cart. You couldn't see it, and that was never a failure on your part. Nothing in the system was ever built to show it to you. There's no line, no label, no receipt. That information simply isn't printed anywhere you're allowed to look. But you can trace it now. And that changes something real. The next time the total is higher than you expected, you don't have to sit there wondering whether you're imagining it or whether you've somehow gotten worse at this. You can point at the path the money took and know it's a real thing, with a real route that arrived at your cart the same way it arrives at everyone else's. That doesn't make anything cheaper. It does mean you're no longer guessing. Educational only, not financial advice. Thanks for spending this one with me. I'll see you on the next.